What is up, guys? It's time for Dylan, back at it again with another crypto video. What is up, guys? It's time for Dylan, back at it again with another crypto video. Thank you guys for tuning in. You guys are awesome. If you're new here, subscribe, bell icon, get notified when I'm posting videos because it's all time sensitive. In today's video, you already know, we got to talk about what is going on with PEPE. PEPE, the frog, one of the craziest memes on the internet, dividing the culture between left and right back in 2016, 2017, 2018, making its way back into the culture, but this time with cryptocurrency. So we have to talk about the crypto coin everyone has been talking about, PEPE the frog. What's going on with this crypto coin? I'm going to tell you everything you need to know about this meme coin in today's video. And then, of course, we have to talk about what happened with First Republic Bank today, officially being seized by the United States government, sold to JP Morgan. Of course, just another case. Privatizing profits, socializing losses. Got to talk about this. Is the bank crisis over? Mainstream media and a lot of big name individuals in the government would like you to think that. But of course, I don't know how to feel, especially considering we have the FOMC meeting 1 day away. Literally, 1 day away, coming this Wednesday. 1 day, 17 hours. We are going to see, yet again, another rate hike. This right here is the exact reason why the banks are failing. Because the rate hikes have to continue on if we want any chance at quelling inflation. And then, of course, to finish things off strong, we got to talk about what is going on with the Bitcoin punks, the Ordinal collection, one of the very first on the Bitcoin blockchain, ripping yet again. Massive spike in volume. So make sure you guys stay tuned until the end of this video so you don't miss out on any of this important information. As always, first things first, got to take a quick look at the cryptocurrency market. As you guys can see, things don't look too good today. We're down 3.3%, back down to $1.16 trillion. I'm still happy that we're still above $1 trillion. That's a great thing to see. Market cap, once it hit $1 trillion, I think everyone in the world started taking cryptocurrency a lot more serious. Things are still extraordinarily volatile because of the macroeconomic situation. As you guys know, inflation has run rampant over the last 2-3 years, and it looks like it's not going to be coming to an end anytime soon. Why is that? Well, that's because the only way to quell inflation is to raise rates. And as we've seen time and time again, the rates keep going up, the banks keep going down, the banks keep crashing. And it looks like there's literally no win in this situation. And of course, every time one of these banks crashes, what happens? The Federal Reserve needs to print more money, which is just causing more inflation. So literally, we are stuck between a rock and a hard place. We are in a pickle. Nothing we do is going to solve this problem. And that is why a lot of these risk-on assets, especially risk-on assets in the stock market, aren't doing too well. The beautiful thing is, however, Bitcoin seems to be resilient. Bitcoin seems to be doing better than it was before the first bank crashed. And of course, I do anticipate, especially leading up to the next Bitcoin halving cycle, less than a year away from today, Bitcoin's price will probably trend upward. Of course, it's a risky asset. It is volatile. It's going to go up, down, but the trend is your friend, and Bitcoin keeps trending to the upside. So overall, I'm still bullish on crypto. I'm still bullish on Bitcoin. I'm still bullish on Ethereum. I'm still bullish on Cardano. But taking a quick look, you already can see Bitcoin's price is down 4.2%, 420, lows. Gotta love it. Maybe it's stuck at 420 because of PEPE. I don't know. We'll get to that later. But Bitcoin's price down just a little bit on the day, still up on the week, 2.3%. And of course, you guys already know, Bitcoin moves, the market follows. That's because Bitcoin's dominance still right below 50%. Now, a lot of people have been saying for quite some time, Bitcoin's dominance will never reach 50% again. I don't really have an opinion either way. I just like to look to see where it's at, and it appears as though they're wrong, and it appears as though Bitcoin's dominance continues to trend upward. Now, what is the significance of dominance? Basically, that means Bitcoin controls the market. We've seen that since its inception. Bitcoin has remained in control of the market, and when Bitcoin moves, the market follows. That's why I always say that in every single one of my videos, because until we see something different, until we see that that is not the case, I'm going to continue to say that. Just like the 4-year cycle. We've continued to see that the 4-year cycle is still intact, still remains to be the only cyclical action in cryptocurrency that is remaining true. So until that cycle is broken, I'm going to continue to believe that the 4-year cycle is still in play. Now, looking on down at some of these other cryptos, of course, everything is in the red today for the most part, except PEPE. PEPE, absolutely ripping, melting faces. But let's take a look. Ethereum still down, almost 3% on the day, still hovering right around 1,800, so that's a good thing. Then Cardano, of course, losing the 40-cent range once again. It has been ranging right in between this particular price range, right between 37.50 and 42.50. That's where Cardano likes to stay. And if you guys remember anything about Cardano, especially in the last cycle, it tends to get stuck at a certain price. It doesn't move for a long time. People used to call Cardano the stablecoin, right? That's because it used to just sit at 5 cents for like 3 years. And then once it ripped, it was gone. So that's why never sleep on Cardano. As you guys know, Cardano is in the last leg of its roadmap, Voltaire, scaling, peer-to-peer. It's all coming to fruition. We're about to see Hydra go live on the mainnet. Once it does, it is game over. So I'm super excited about Cardano. I'm super excited about Ethereum. Now, of course, you guys know this channel. I'm definitely more of a Cardano fan. I love to talk about Cardano because, to me, Cardano NFTs, they made me a lot of money. Overall, I love the peer-to-peer nature. Everything was peer-reviewed from its inception, unlike Ethereum. And Charles Hoskinson, the co-founder of Ethereum, left Ethereum because of, a difference of opinion on how it should be executed. Went off to create Cardano, and ever since then has been creating a beautiful ecosystem from the ground up with scalability in mind, unlike Ethereum, where they just rolled it out and tried to slap band-aids on it later. Now, of course, you can't ignore the fact that Ethereum's market cap is literally 10, 20 times bigger than Cardano. However, once people start to see that gas fees are not solved on Cardano, which they're already starting to see in the depth of the bear market, right? Or the beginning of the bull market, however you want to look at it. We have seen gas fees on Ethereum absolutely ridiculous, like $10, $15, which is pretty good considering at the top of the bull market in 2021, 2022, right? We were looking at hundreds of dollars just for a single transaction on the Ethereum mainnet. So considering we're nowhere near that now, still doesn't look good, because once we go back and surpass the network activity where we were last bull market, right, things are going to be hectic, haywire, absolutely ridiculous. And nobody wants to spend tens, if not hundreds of dollars on one transaction. It's not feasible. It's not scalable. No one wants to do that. That's why I love Cardano. Even at the height of the bull market, we were talking 16 cents per transaction. So overall, I'm still excited on all three of these projects. All three of them, I love. Bitcoin, Ethereum, Cardano. I'm not a maximalist. Never will be. I think maximalism is stupid. That's why I also hold gold and silver. Because you never know, people. You never know. But anyway, moving on along, we got to talk about PEPE. Absolutely killing it. Now, I'm sure you guys have been seeing everyone on Twitter talk about PEPE making insane gains or even losing their entire life savings on this coin. And I just want to caution you guys to do some research and really look into what this project is before you decide to ape in. Now, of course, Dogecoin, Shibainu, and now PEPE, the meme coins, are some of the biggest gainers in all of the crypto ecosystem. And I do think that you can't ignore that. However, you do just need to proceed with caution. And I will say this, if you are contemplating jumping into these meme coins, right, Doge, Shib, even Floki, Inu, PEPE, any of these meme coins, all I would say is wait for a dip. That's all I'm going to say. I don't condone them. I'm also not disowning them, because people can make money with meme coins. All I'm saying, just like any other crypto out there, just like any other asset out there, you want to buy low and sell high. And I know that seems like it's such common sense, but once your money is in these projects, once you're thinking about buying in, it literally goes out the window. That's why most people bought Cardano at the top at $3. That's why most people bought Bitcoin at the top at $60,000. That's why so many of the people I know bought Ethereum at $4,500. And that is because they let their emotions pull the trigger on these investments when they should have waited for them to retrace, like where they're at right now. Nobody's talking about them. Why is that? Now is the time, right? With Bitcoin, Ethereum, Cardano, all these cryptos are down significantly from their all-time highs. Now would be the time. Not like Pepe, up what, 1700% since its inception? It doesn't show up, but I know it's like 1700% up from its inception. All I would say is, if you're thinking about jumping into these coins, wait for a pullback. But of course, not financial advice. I'm just some dude on the internet. That's all I am, okay? So I just wanted to point that out. Taking a look at the tokenomics, you could see that there are 420, what is that? 100,000 million billion trillion. 420 trillion Pepe coins. And of course, the fully diluted market cap is just around $500 million, right? $500 million. And if we go to CoinGecko just to double check, looks like it's right around the same number, right? Just about $0.5 billion. Now, if we come back to CoinMarketCap, take a look at Dogecoin and even Shiba Inu, we could see that their market caps, right? Shiba Inu, we're sitting at $5.8 billion. And taking a look at Dogecoin, double that, 10.9, almost $11 billion. So considering Pepe has a market cap of 500 million, right? Not even 1 billion, $500 million. We could potentially see a 10, 11x to get to the place where Shiba Inu is, or even a 22x to get to where Dogecoin is currently sitting. Now, of course, I'm not saying that's going to happen. I highly doubt that it will, but it could. Okay, so just keep that in the back of your mind. I'm not saying that you should go out and dump your entire life savings into these coins. And I'm not even saying to think about buying them. I'm just saying if you are in the camp that you have already made up your mind and you're going to be buying this coin, wait for a pullback. That's what I would say. If you're sitting on the fence like me, I am sitting on the fence and I am actually contemplating jumping in, keep in mind where it could potentially go. Time and time again, I see people look at the price just like this and say, oh, what if it goes to $1? What if it goes to 1 penny? Look at the market cap, judge it, compare it to other cryptocurrencies that are in the same category, meme coins, right? Dogecoin would be the best case scenario. See where its market cap is, and then figure out what it would need to do to get there, right? So we looked at that. It would be like an 11 to 22x. That would be the best case scenario. And of course, you got to keep in mind, Dogecoin, one of the oldest cryptocurrencies in the world, recommended by so many people because it is a fork of Litecoin, which is a fork of Bitcoin. So it has solid code. And of course, it's backed by Elon Musk. That's why it's sitting where it's sitting. Is that going to be the same case for Pepe? I don't know. I highly doubt it. It is possible, but it's highly, highly, highly unlikely. So let's just all be realistic with our expectations with these meme coins. However, I'm a fan of Pepe. I've always loved the meme. Even when it was canceled off the face of the internet, everyone hated it and stopped talking about it. I was one of the people that have always loved memes since Funny Junk. Literally. I was one of the OGs on 4chan. So I love memes. You guys probably love memes too. And I remember when this meme came out, I was a big fan back in high school. So that was like, what, 15 years ago. Last thing about Pepe is this. It is going to be added to OKX, which is a cryptocurrency exchange in Hong Kong. All the different exchanges will probably be listing them because they want to make money, right? So just keep that in the back of your mind. Does that mean that they're going to be successful? Maybe, maybe not. Nobody really knows. But once they get listed on major exchanges, it just makes it more readily available to the average person that isn't as into crypto as you and I. So just keep that in the back of your mind. Moving on along, we have to talk about what happened with First Republic Bank. As you guys know, more banking problems. Now, all of this stems from the fact, and I keep talking about this as I'm like a broken record, that in 2008, the Federal Reserve set interest rates close to 0% as an emergency measure from the 2008 financial crisis. It was not supposed to be a long-term thing. However, greed, corruption made it so that that emergency junction lasted for 15 years up to the pandemic. And even through the entire pandemic, we were close to 0% interest rate on federal bonds. So all this time, banks have been accumulating bonds at close to 0% interest rate, which to them they thought was a guaranteed source of income, guaranteed source of return on investment. And then, of course, throughout the pandemic, we had more emergency junctions set to make the Federal Reserve rate, right, the reserve ratio, close to 1%. So 1% of deposits had to be held instead of the 10% that is normally the case, okay? So everyone deposits their money into banks. They only have to hold 1% in cash deposits, and the rest, what are they doing? They're lending out and putting in bonds, which are the least risky type of investment. Pandemic came, we printed trillions of dollars, which one could argue was justified. Some would say is not. Regardless, money was printed, injected into the system, created inflation, and the only way to fix inflation is to raise interest rates. So what happened? Federal Reserve came out, started raising interest rates. Fast forward to where we are now, rates are still going up. And what is it doing? It's causing these banks that hold way too many bonds to go under, because the bonds they're holding are becoming worthless. And a lot of these banks will hold like 60% of their entire balance sheet in these bonds. So what happens? You go to the bank to pull your money out. They don't have the cash on hand because of the retarded reserve ratio. So what do? They have to start selling assets. And bonds seem to be the easiest thing to sell. So they start selling the bonds at a loss. Creates panic. People keep pulling out money. They have to keep selling the bonds. Eventually, they are under because they have to sell at a loss. So that's the situation we are in. We saw it with Silicon Valley Bank. We saw it with Signal Bank. Now we're seeing it with First Republic Bank, which is now the second largest bank failure in American history. The last second largest bank failure was Silicon Valley Bank. But this one was bigger than that. So now this is the second largest. Silicon Valley Bank is now the third largest. And this one is not far behind Washington Mutual. So just keep that in the back of your mind. Of course, JP Morgan, right? Jamie Dimon, federal government would like you to think that this was solved. There's no problem here, right? JP Morgan came in and saved the day. However, once again, this is another case of privatizing profits and socializing losses. And that's because if you read the fine print, I don't even know if it mentions it in this particular article. But yes, JP Morgan came in, acquired most of the assets. But guess what? All of the mortgages and assets that the bank was holding that are now under, right, that are at a loss, are going to be subsidized by the federal government. So that means you and I, people, you and I are going to be paying for that. Directly? No. They're going to print more money, of course, to solve the problem. And then what happens? You and I have to pay it off over the next 30 decades. So, of course, they would like you to think that the problem is solved, but no, it's not. They had to print more money in the middle of an inflationary period to solve this problem. And guess what that means, people? Guess what that means, people? That means they have no choice but to raise rates yet again. Now, if you guys remember the last video I made, we were talking about this. We were on the CME FedWatch tool, CME, the Chicago Mercantile Exchange, guaranteeing at this point pretty much 93.2% chance of a 0.25% rate hike coming up in 1.5 days. Not good at all. Why is this not good? Because as I just laid out, the reason why banks are going under is because they're holding bonds. And as the rates go up, those bonds become worthless. So now we're in an even stickier situation where because they had to print money to solve this problem, right? They're going to have to raise rates now to solve that problem. So now we're in a circle, guys. Bank fails. Okay, we got to print more money to fix the problem. Okay, print more money. We got to raise rates. Okay, raising rates is going to make the banks crash. So we're stuck in this cycle. Nothing seems to work. And of course, I wouldn't be surprised if we see more banks fail in yet a couple more weeks, couple more months. They would like you to believe that the banking crisis is over. But if you just pay a little bit of attention, look a little bit deeper, it's clear to everyone that does some homework that this problem is just getting started. Keep that in the back of your mind. And then the last thing I would like to say on this topic. So last time we raised rates going into an inflationary period where M2 money supply was decreasing, which is where we're at now. M2 money supply keeps decreasing. Even though we're printing money, M2 money supply keeps going down. Last time that happened was right before the Great Depression. So are we in a recession now? Of course we are. Is the government admitting that we're in a recession? Of course not. What does that mean for you and I? It means get ready because we're about to see maximum damage. Is it going to happen next week? Is it going to happen next month? Is it going to happen next year? Nobody really knows. My guess, however, would be this is going to happen right after the election because you already know the party in power likes to fudge numbers to make themselves look better, regardless of who's in power, people. Let's try to keep this bipartisan. Everyone does it. So once this election is over, whoever takes the reins is going to see absolute mayhem. Absolute mayhem. So get ready. That's all I'm going to say. And the last thing, of course, got to talk about Bitcoin punks absolutely ripping. As you guys know, I talked about this project back when it first came out, right after it minted out. I was telling you guys about Bitcoin punks. I rode it all the way up to like 1.5 ETH. It came all the way down to like 0.3 ETH. Still holding my Bitcoin punks because I'm a believer in this project. I'm a believer in ordinals on Bitcoin. If you know anything about ordinals, you know that the ordinal inscription number is extraordinarily important. At the time of recording, there's something shy of 2 million ordinal inscriptions on the Bitcoin blockchain. And considering Bitcoin punks is a sub 30K ordinal inscription, this right here is one of the rarest ordinal collections on Bitcoin. Now this right here is a 1-for-1 port of the CryptoPunks from Ethereum. Now they did it the exact same way as the collection on Ethereum, where it was a free mint, literally 100% free. All you had to do was interact with the smart contract and you got your own NFT minted directly into your wallet. And of course, there's really no like founding team behind this that made money from the mint. Now, of course, whoever was able to mint these made a lot of money. However, there is no team that actually minted these. There's no team that made money off the mint. And for that reason, I don't see any problem with this. Now, I just wanted to point this out. Over the last 7 days, we've seen a 280% increase in volume. 236 Ethereum spent on this collection alone. And that's why the floor price is up almost 60%. Earlier this week, it was up over 100%, making its push back up to the 1 ETH floor price range. So I just wanted to throw this out there, put it back on your radar. If you guys don't know anything about ordinal inscriptions, check it out on YouTube. I made a video a long time ago. It's totally outdated now, so don't watch that video. But check it out on YouTube. There's plenty of videos out there, some great content creators that tell you everything you need to know about ordinal inscriptions. I just wanted to remind you guys, this project right here is definitely here to stay. So that's really all I have for you guys today. If you guys made it this far, you guys are awesome. Make sure you guys smash that like button, drop a comment down below, and of course, subscribe to the channel if you haven't already. Try to post crypto videos for you guys. I also just started my second programming tutorial series, jumping further into Python. So we're doing intermediate Python now, and of course, everything. Learning how to program with ChatGPT. So if that sounds like something you're interested in, follow along. But you guys have a beautiful day, beautiful night, wherever you guys are. Dylan is out.